What is the ECB's deposit facility rate? Have you ever wondered how central banks influence the economy? One key tool in their toolkit is the deposit facility rate set by the European Central Bank. So, what exactly is this rate? The European Central Bank's deposit facility rate is the interest rate at which commercial banks can deposit their excess reserves overnight with the European Central Bank. This rate acts as a floor for short-term interest rates in the Eurozone money markets. Banks will not lend to each other at rates lower than what they can earn risk-free by depositing their funds with the central bank. As of mid to 0 to 5, the deposit facility rate is set at 2%. This rate is lower than the main refinancing operations rate, which is 2.15%, and the marginal lending facility rate, which is 2.40%. These three rates are crucial for understanding the European Central Bank's monetary policy. The deposit facility rate signals the minimum return banks receive on their overnight deposits. This, in turn, affects liquidity and credit conditions in the euro area banking system. From the perspective of capitalism, this rate is vital for managing inflation and economic growth. When the European Central Bank adjusts the deposit facility rate, it influences how banks lend money. A higher deposit facility rate discourages banks from holding onto excess reserves and encourages them to lend more. This can stimulate economic growth. On the other hand, a lower rate might lead banks to keep their funds deposited at the European Central Bank, which can tighten liquidity and help control inflation. The current rate of 2% reflects a careful monetary policy aimed at balancing inflation near the European Central Bank's target of around 2% while also supporting economic stability. This rate has been adjusted multiple times in recent years due to changing economic conditions, including inflation trends and global trade uncertainties. In practical terms, the deposit facility rate helps maintain stability in the Eurozone financial system. It provides a clear benchmark for overnight interest rates, which supports efficient capital allocation. This is a fundamental principle of capitalism. By ensuring that banks have a safe place to park excess funds, the European Central Bank reduces systemic risk while allowing market forces to operate within a framework set by its monetary policy objectives. So, next time you think about how central banks affect our economy, remember the important role of the deposit facility rate.